Hey everyone, welcome back to Corporate Decoder, the place where we take your boring financial reports and turn them into something actually interesting, or maybe just a little bit less boring, so grab your popcorn because today we are diving into Datavault AI Inc. And let me tell you, they've been busy. So what exactly is this report all about? Well, it's a Form 8K, which is like a company's diary for important events they need to tell everyone about right away. Think of it as the SEC's way of making sure we all know what's cooking in the corporate world. This particular filing is all about Datavault AI Inc. making some big moves to bring in cash. Okay, so Datavault AI Inc. is the company we're looking at. They're a Delaware corporation and their ticker symbol, if you like to play the stock market, is DVLT. They're listed on the NASDAQ capital market, so they're not some small outfit hidden away. The main event here happened on August 4th, 2025. Now, this is where things get interesting. Companies often need money to grow or even just to keep the lights on. And Datavault AI seems to have found a way to raise a pretty significant chunk of it. They've entered into what's called a securities purchase agreement. This is basically a fancy way of saying they've agreed to sell a bunch of their securities to specific investors. These investors are called purchasers and they're buying senior secured convertible notes. Let's break down these notes. First off, there are initial notes. And then there are additional notes. The initial notes have a principal amount of about $6.67 million, and they're selling them for a purchase price of $6 million. So they're essentially discounting them a bit. That means for every dollar's worth of notes they sell, they're aiming to get about 90 cents right up front. Now, about this convertible part, convertible means these notes can be turned into something else, usually stock shares in the company that is. So these investors are giving the company money now with the option to potentially own a piece of the company later if things go well. And senior secured means if the company can't pay back its debts, these notes are higher up on the list to get paid back before many other debts or agreements. This makes them a bit safer for the investors, makes them a bit safer for the investors. The company is expecting the first batch of these notes, the initial closing, to happen around August 5th, 2025. The additional notes will close at a later date after certain conditions are met, one of which is getting approval from their stockholders to issue more stock. This makes sense because if these notes convert into stock, they need to make sure they have enough shares to give. The company is using a registration statement on Form S3, which was filed back in July to make sure this offering is done legally and above board. It's already been declared effective by the SEC, so they're good to go on the paperwork front. Now, one of the strings attached to this deal is a lockup period for the company. They've agreed not to sell any more stock or similar things for 45 days after each closing. They also can't issue certain other types of securities if it would cause problems with these new notes. This is all done to protect the investors who are buying these notes, ensuring. Here's a really interesting part for the investors. They get a chance to participate in future fundraising efforts up to 65% of any new stock or debt offerings the company makes. This is called a participation right, and it means if the company raises more money later, the existing note holders have a chance to double down on their investment. Let's talk about the notes themselves. They mature in 18 months. That's a pretty short term for debt. Usually notes last much longer unless the company is trying to raise money quickly for a specific short-term goal. What's also notable is that no interest accrues during this term unless something goes wrong, like if the company misses a payment or defaults on other agreements. In that case, the interest rate jumps up to a hefty 12% per year. The investors can start converting these notes into stock as soon as they get shareholder approval. And initially the conversion price is set at $1 per share. For every dollar of the note, they can get 1 share of common stock. Pretty straightforward. But here's where it gets a bit more complex. They can also convert at what's called an alternate conversion price. This price is set at the higher of two things. First, a floor price, which is 10.119 cents per share. Secondly, it's 80% of the lowest volume weighted average price of the stock over the 20 days before they decide to convert. This is designed to give investors a better deal if the stock prices drop significantly. And if that alternate conversion price would normally go below that 10.19 cent floor price, the company has to make up the difference in cash. This is to ensure the investors don't get less than what they expected when converting a note into stock. If the stock price tanks, another interesting clause is that if Datavault AI raises more money in the future, they have to use up to 20% of those proceeds to buy back these notes. This is done at a premium, meaning they have to pay 105% of the principal amount they are redeeming. This is pretty good for the investors as it gives them a way to get their money back with a bonus. These notes also come with ownership limitations. The investors can't own more than 4.99% or 9.9% of the company's stock without potentially triggering certain events. This is a common feature to avoid unwanted takeovers or to make sure the conversion doesn't require additional approvals. To make sure these investors are really protected, Datavault AI is also agreeing to grant them a security interest in all of the company's assets. This means the company's property is pledged as collateral for these notes. And some of their subsidiaries will also be guaranteeing these obligations. That's a pretty strong level of security for the note holders. Now, there's another piece to this puzzle. On the same day they struck the deal for the notes, Datavault AI also entered into exchange agreements with holders of their existing common stock purchase warrants. These are basically options to buy stock at a certain price. They're exchanging these old warrants, which would have allowed them to buy about 31 million shares of common stock for the same number of shares of common stock directly. This is a way to streamline things and simplify their capital structure. And once again, this depends on that shareholder approval. These exchange shares will be issued without needing to be registered with the SEC because of a specific exemption in the law. This is usually allowed when companies are swapping one type of security for another directly with existing security holders. Datavault AI is also renegotiating some of their older convertible notes, those issued on April 3rd and May 21st of 2025. They plan to amend these prior notes. The biggest change is to the alternate conversion price used to be 90% of the lowest stock price over 10 days. Now it's going to be 80% of the lowest stock price over 10 days. Now it's going to be 80% of the lowest stock price over 10 days. Now it's going to be 80% of the lowest stock price over 10 days. Now it's going to be 80% of the lowest stock price over 10 days. Now it's going to be 80% of the lowest stock price over 10 days. Now it's going to be 80% of the lowest stock price over 10 days. They didn't do all this for free. They hired a placement agent, Maxim Group LLC, to help them find these investors. And they're paying them a fee of 8.0% of the total money raised, which is a pretty standard fee for this kind of work. They're also reimbursing the agent up to $15,000 for their costs. Now, looking at the exhibits attached to this report, we can see the actual forms of these agreements for the notes, the security agreements, the guarantees, the exchange agreements, and the placement agent agreement. It's all documented and ready for inspection if you really want to get into the nitty-gritty. And the report is signed off by Brett Moyer, their Chief Financial Officer, dated August 4, 2025. So the legalities are all in place. So what's the story here? Datavault AI Inc. is actively raising capital through convertible notes. They're offering attractive terms to investors, including security over their assets and participation rights in future offerings. The conversion price is set to favor investors, especially if the stock price dips, which is a smart move to ensure funds are raised, but it does dilute existing shareholders if converted. The company also seems to be tidying up its existing debt by amending prior notes to align with these new terms. The exchange of warrants for actual shares also simplifies their cap table. However, a key risk here is the dependence on shareholder approval for some of these transactions. If shareholders don't approve the issuance of additional shares, the entire structure could be in jeopardy. Also, the company's reliance on convertible debt means there's a potential for future dilution of existing shareholders if these notes are converted into stock. Datavault AI is clearly in a growth or perhaps a turnaround phase where access to capital is critical. The terms suggest they're willing to pay a premium for that capital, ensuring they get the funds they need to execute their strategy. In my opinion, Datavault AI is taking proactive steps to finance its operations and future growth by offering compelling terms to investors. However, the market reaction and the company's ability to achieve its strategic goals will ultimately determine if this financing is a success for all parties involved. The key will be whether they can grow the business sufficiently to make the convertible notes a good deal for them. And for the investors who convert them, what's your take on this deal? Are Datavault AI's moves smart strategy or a sign of desperation? Let me know your thoughts in the comments below, and if you found this deep dive helpful, please smash that like button and subscribe for more corporate breakdowns. Don't forget to join our Discord community, linked in the description for more discussions and insights. Thanks for watching, and we'll see you in the next video.